Thank you for joining us today. I'm your host, Tracy Bennett. In studio with me are certified financial planners Tony Payne and Stephen Lucan. What's up, guys? We're back.
Yeah, back again.
Knocking out another one.
Yes.
Another great day for planning.
Yep, here we go. All right, we're going to be talking about the year-end financial checklist. I mean, the end of the year's coming. We want to set you up for success. So let's give you a bullet point list of things to look out for. What is the first, I guess, if someone was looking at their spending, what would be the one surprise that would usually make them say, wow, I didn't realize I spent that much?
Oh, we're going straight to it?
Yeah, we're going right in. As you're looking ahead, do you want to set it up? Are you looking?
Yeah, well, the first thing you need to do is look at last year's checklist.
So
right? So the reason I say that is it's important to have this review because then you can look year over year, right? Even look at all the companies when they report earnings, it's year over year earnings because they look at last year. Now let's look at this year. So the first thing you should do is look at last year. So since we're starting with day one, now we'll build that first step for 2026.
And I took it a different way.
Okay.
I thought we were doing year-end planning.
Okay.
So that would be looking back at what did I spend for 25.
Right.
Then planning ahead like you're saying.
Correct.
So let's do a little bit of both.
Well,
because, hey, you're going to have a little time here over the holidays, hopefully a little quiet time to do a little bit of
But I'm
Christmas
saying pull
past,
out
Christmas
12/31/2024 as the starting point. So next year we're going to pull out 12/31/2025.
Oh, you're talking about a major scrub of the year before.
Yeah, so you just compare the two, right? So that's why we're going to show you how to build today's. So next year you have 2025 to reference.
And let's say you didn't start in 24, go with my way. Let's do it that way.
Yeah.
You start brand new with what did I spend this year?
Let's start today.
Something tells me you both use spreadsheets a lot.
Yes, love my Excel.
You like?
I hate it. I don't use spreadsheets. I hate Excel.
Do you?
I do.
So are you in the belief, and maybe this is subjective person to person, of sort of weekly going through your expenses or daily? What do you recommend when somebody at the end of the day?
What's your pattern of expenses, I think? I mean, the idea of if you're somebody who's got a set routine, maybe you're a retiree, you've got that pattern. You know where your money's been going. You've tracked it for years on years. That may be a different tempo than somebody starting out or, hey, I've moved to a new area. This is a new family member. Life has changed. There's lifestyle creep is what we'll call it. So depending upon the phase of life might affect the tempo. You know, earlier on is probably that weekly rather than monthly because monthly you're already getting a statement. You're paying the bill. So if you're looking at it weekly, that's the opportunity to say, maybe I've overdone it. Oh, maybe I haven't funded this yet. You know, you have the opportunity to catch things. And then hopefully you're ramping up from there.
Are you relying on technology at all for this?
It's easy. It's your friend. Should be your friend.
Technology meaning, and there's lots of them out there, but software that looks at your expenses.
Yeah, that's why I hate Excel, I guess. You know, Excel to me was the rudimentary way of doing a lot where if you're used to it, you've got
the toys.
Your 8-sheet page, your 8-sheet spreadsheet there that connects. One wrong formula, the whole thing's off. I like the idea that they've got engineers, experts, people proofing this out, checking it. So if I'm relying on this number for next year's expenses or what I'm saving, one little formula goof doesn't blow it for me. So that's why I like technology. Maybe it's your credit card company or the institution you're spending your money with. They usually have a track of all your spendings. So you might be able to just look at that, use that tool, tag them, basically tag your expenses in there without having to extrapolate it down.
Right, but see, the reason I don't like that is they try to tell me what my categories are.
But you're a control guy, right?
No, right. But if I go out for lunch during the workday, that is a food lunch expense. If I go at dinner time, it's a dinner expense. The credit card companies
it's not just restaurants.
Credit card company would be restaurants.
So you really refine.
I want to know how much I'm spending during the workday, where I could bring my food from home for my lunch, versus going out every day. And you'd be surprised how much money you can save there.
Yeah,
that's why they tell me I want to know the categories myself. That's why I'm the control freak on the.
Hey, I respect it.
Excel
Even
spreadsheet.
within planners, two different ways, which is fine.
It's fine. Whatever works for you.
The idea, though, is do you know it? Because the key is knowing it. Because if you know it, then you're going to start to – it's I heard you say earlier, we hate the word budget. I mean, budget, again, it's not the word budget, but it's the idea of are you planning ahead or are you just doing it? Yeah. And if you're just doing it, like most of us are, Well, be real with it. Look at what you actually spent. Don't say, tomorrow's $200. That's what I'll spend. No, what did you really spend the last 5 days? That's probably what you're going to spend on day 6.
Well, yesterday I wasn't going out for lunch, and then I saw him today. I said, let's go out for lunch. My budget would have been destroyed within 24 hours because I said I was not going out for lunch.
He's going to be thinking of me tonight, updating a sheet.
Line item Tony's expense. So you got to, again, whatever works for you. But to go back, when we talk about how do you save money and how do you adjust things, that was one of the experiences I learned was I separated those categories. And I realized how much money I could have not spent, I don't use the word save, but not spent by bringing my lunch to work versus going out every time for lunch. And I was able to not spend a lot more money. I had a lot more money. I kept a lot more because I didn't have that wasted expense.
Right. Well, I'm going back to the question. If somebody looks back at their spending, what's the one surprise that usually makes them say, wow, I didn't realize I spent that much?
Eating out.
Yeah.
I mean, how much you spend on groceries, eating out. I mean, the total between the two, which, again, if you think about expenses and inflation, it's real. So being mindful of that. And, you hear some people talk about there's baseline inflation and then there's consumers who are wise in their shopping inflation. And if you're somebody who goes 3 different grocery stores for 3 different things, you might not be seeing the same inflation rate as somebody who goes to that one name brand store for everything. Yeah. So that's, again, back to the idea, though, of you can control some of this.
The other, there's two. The general one, like Tony said, is the subscription services. Those easily add up quickly, all the online subscription services for whatever that is. But the big one for 2025 and 2024 is insurance. All the costs for insurance, auto insurance, home renters, you got a 20% plus increase.
Is there I've seen the percentages. I've seen charts where you should spend 50% on this and 20% on this. Is that marketing on your lifestyle of your income? Or is that marketing?
No, that's I don't believe.
I mean, there's rules of thumbs they teach us in finance school, which you can Google them, get them out there. But why we're so dismissive of them is what we always say. It depends. Are you a 2-income earning household? Do you have 3 kids? Do you pay for private school? Do you tithe? What's your tax rate? That's why we say it depends, though, versus spend 30% on your housing pre-tax. That's the rule of thumb. I mean, there is that rule of thumb, but that's why we can't help but dismiss it because it's just that. Everybody's thumb's a little different.
Yeah. That's good to know.
But the insurance, that's why, again, tracking it year over year, see what you paid last year for your auto insurance or homeowners or renters and see what you're paying this year on renewal. It's 20-some%. That's why you don't believe what the government tells you inflation is. I don't care whether they tell you it's 3%, 4%, 2%, whatever. It's where you spend your money. That's what inflation is, and that's why tracking it is so critical, right? Just something you spend exactly to buy the same thing every year, the same thing. Whether maybe it's season tickets to your favorite sports team. What did you spend last year for those exact seats? And then what did you spend this year for those exact seats? And that's what inflation is.
And it's kind of funny. Usually the more you spend, the lower your inflation rate. The base goods are the ones that seem to inflate the most. But the more that you have on discretionary funds, those are the items that have, when you said it, you don't care what the government said. They're factoring in cars, TVs. What if I didn't buy those? What if I didn't buy clothes?
Right.
So depending upon your discretionary income, you might be buying a lot of that stuff that's been flat or actually gone down.
So the cost of TVs have gone down.
Yeah, exactly. Yeah, I mean, and computers, cars. I mean, you think about some of that stuff, and that's where they can come up with some of these lower numbers. But if you don't have that discretionary income and it's just about that base basket of goods, it can be really powerful, really in a negative way.
Yeah. Should you start? We recently did a show on open enrollment for health benefits. So there's a timeline involved with that. And having heard you talk about insurance, it kind of spurred a question. Should you be in this situation, a year-end financial planning checklist? Are you looking at maybe August to start doing this, or does it make sense to do it at the end of the year?
Given the year-end checklist?
Because if you're paying too much for your auto insurance or your home insurance, then you can assess if during
Well, I'm going to interject to say we have to be real here. I mean, that's why we're in business. Because you don't have the time to sit there every night checking your balances, going through being Scrooge McDuck. You don't have that. You've got 2 kids. You got to run off.
You can't obsess over
it. Right. I mean, the idea, though, of I've got to be at practice. I've got to be at work. I've got this church event. The idea of there's a letter soup. I mean, we're just talking about it. The tax code stacked up goes to the moon. Mm-hmm. So the idea, though, of my year-end checklist, to try to keep it broad of, is this the year that I hire an advisor? Is this the year I get my estate plan done? What are my goals? Mm-hmm. And again, you can focus. If you know I'm in a lot of credit card debt, focusing on cash flow, spending a lot of time rightfully updating each and every category makes sense. Now, if you're, hey, I've got more, I'm wondering where I put it, where I save, then the focus might be, do you have enough disability insurance? Is your goal next year to hop through all the hoops, get the and again, where do I start? Mm-hmm. Again, that's why why we're in business, why we have a role, because you may even know what you need to do, but how can you get there? Mm-hmm. Who helps me keep me accountable to it?
Oh my gosh,
these are all the things that, when we think about year-end planning and the beginning of January, it's usually one of our busiest times because it's part of that New Year's, new cycle, new me. Okay. So you go through your year-end checklist and say, this is a lot. Well, then it might be time to talk to somebody for some help.
Mm-hmm. And it's the date, right? 12/31/2025. That's the benchmark. So should you track it all year round? Yes, but how frequently is what Tony's saying. Don't obsess over it. Mm-hmm. But yeah, you should be accumulating this every month through the year, every quarter through the year. So by the fourth quarter of December of that year, you have it all wrapped up, ready to go, and you can compare the prior year versus the current year and see how you did.
Okay.
Matching them up.
You talked a lot about spending and saving, but I want to talk about retirement contributions. And we just did a podcast on that subject if you would like to tune into that. Maximizing your contribution. So how does somebody know if they're leaving free money on the table with their retirement plan, and what actions should they take at the end of the year?
They should read their benefits handbook, which we talked about, understand what's available to them in their retirement savings plan, and then measure what they save and see what they saved the prior year and continue to build off of that.
Yeah, depending upon your age, hopefully you're with one of those employers that if you're able to max out, they automatically put that extra money in if you've set a percentage. You might have to pick a dollar amount, or maybe you picked a percentage years ago and you're in that age group of 61 or 62 or one of those ages where they've increased some of the contributions. There's the catch-up and what they might call a super catch-up now. So depending upon the kind of plan, depending upon your age, that's where you got to really get in there to say, I don't want to leave money. Maybe it's not just the match that you're leaving on the table, but maybe beyond that, you could have maxed out this year and saved yourself some more taxes or put more in your Roth 401k. That's what you want to look at.
Mm-hmm. When you're looking at the end of the year, or you're looking at the previous year of your lifestyle, and we're not tax accountants, but are there things that you should do to evaluate the tax strategies before the end of the year comes?
Yeah, well, it'll come to categories, as you said. So you have to understand what could impact your taxes, whether it is an IRA contribution. So if I save this into an IRA, your accountant will help determine whether or not that was helpful to you from a tax perspective. Charitable contributions, how much interest you paid to certain types of debt accounts, whether it's a primary mortgage, secondary mortgage, home equity line of credit. So those are all important. So categorizing, knowing what categories impact your taxes and track those healthcare costs too, right? So that'll help you determine what kind of health insurance or health plan to sign up for at your workplace. That's why the categories are important.
Yeah. And I can't help but tie this into if you have an accountant, which is really important, I think. Again, there's all these tax programs out there. Yes, they're a lot cheaper sometimes than hiring an accountant. I understand a lot of people, I hear it, very smart people will say, I can do it myself. And you're not paying for that piece of paper, that stack of paper for the return. You're paying for that base of knowledge that when throughout the year you have questions. Not, oh, it's January, February, I got all my statements, let me get my refund. Or have a surprise bill. Hopefully you have somebody that in June, when you're planning things out, going, hey, I'm in my open enrollment now. Is this something you want to bounce that off of them or bounce that off of somebody? Hey, I sold some stock. I'm here at work and I've got all these things coming due. That's the time, hopefully, and if you haven't done it then, hopefully now year end, get with your accountant, review some pay stubs. And if you don't have one, this is the best time to find them before the busy season.
Mm-hmm. And when does that start?
January, February, when people start getting their statements, accountants are usually daylight shorter, but they're at it all day doing returns. So, hey, consulting a new person even, I mean, we already know there's a limited number of accountants out there in the profession, so time's limited. So if you can catch them before then, November, December usually, be able to review a pay stub, maybe what have you done in your brokerage account this year, that'll help give you guidance so you're not surprised in April.
And that kind of leads into my next question. We talk a lot about emergency fund and your cash flow. At the end of the year, should somebody evaluate the sizable amount that they should amass for the next year, or is it?
Yeah, yes. The answer is yes, because there's a lot of different like here's a strategy that I saw that worked fantastic is they would build their savings account as both an emergency fund and a secondary savings account. And then when they had a certain amount, they would make their IRA contributions from it. So they got their build up, and now all of a sudden we have extra money. Boom, January 1, they had their IRA contributions funded. Then throughout that year, they save. January 1 of the following year, they had their IRA contributions funded. So
is it better to do that in one lump sum or monthly?
It depends. That they liked it and it made them feel good, and it was done January 1st. Okay. So that's a whole separate episode. But again, just concept wise, so you can use it for both things. But if you have discretionary savings, that's a home run. I think a lot of people starve for just to have discretionary savings, but that's the goal.
See, I'm such a simplest person, I guess, or simple person here. I'm like, save. Whether you save monthly, you save once a year. I mean, you can go into the studies. Vanguard, other big companies have done them. You reference them on your own, but the idea is it's very similar. It's very close. So argue that, split hairs all day, but go to the bigger picture. Are you saving or not?
Got it.
Yep.
Okay. And what about reviewing your portfolio performance at the end of the year? I mean, is that something you do at the end of the year? You do that mid-year?
12/31 benchmark, right? Yeah. You can do it a couple times. Don't obsess over it.
So what's the sign somebody's portfolio might be out of whack and needs a tune-up? Is that something an average person could see and understand?
Well, that's, again, right, great question. And maybe where your money is invested does an annual rebalance every January, right? So it'll be rebalanced. The two important numbers I would say is what was the January 1 balance? And then what was the December 31st balance? And then how much money did you add along the way?
And you can see that on
and just keep tracking it. Yeah. And some of the newer programs will give you, here's your rate of return, here's all that stuff. So that should be at your disposal. But I think the important number is how much did you add to it? And are you going to continue to add that amount or increase it? That's the most important number.
The mistake maybe, or what I could see as a mistake, would be looking at that statement 1231, seeing a number and reacting to it. Hopefully you've planned ahead. That's part of risk tolerance.
Reacting to it in what way?
Let's say
in what sense?
You're used to, and just a snapshot, let's say the S&P was up the S&P 500 was up 15% for the whole year. At 1231, that's what it ended at. You open up your statement and go, I'm up 12%. What did I do? I'm a loser. What? Well, there might be plenty of other factors that say you were right on track. And that's where the idea of don't react to just the number. That's what I mean by, or maybe it's double. Maybe you were outsized in risk in one area. Great, it worked out. But the idea of, okay, what's my risk tolerance? How am I diversified? That's one thing we believe is diversification. So are you diversified is a big one.
How does somebody avoid an oh no moment at the end of the year when a big expense pops up? And there are ways that you can catch up.
Expense?
I don't know, wedding, home repairs, tuition, that kind of stuff.
Okay,
life.
Right. Well, that's where the emergency would come into play. Emergency fund would come into play for a home repair. It's not a wedding, right? So those are planned expenses. So you have to separate planned expenses versus unplanned expenses. And the unplanned expenses is why you have a cash reserve emergency fund.
Does it make sense to put those in separate accounts?
Yes. Yeah. Separate goals, right?
I want to define clear, actionable goals that people can create for themselves. So as they're setting financial goals for the next year, what is a goal that makes you personally feel excited, not overwhelmed
I had
about
one
money?
Shared with me, so I'm going to share it with you. So I'm sitting there talking with someone about their goals for the next year, getting on in life here, and they mentioned, we're pretty excited, and they're joking with me, we're going to put a bar in the shower. Okay, great. This is wonderful. You're getting older. You're going to stay in your house. Great. And he goes, should I put in scotch or bourbon? Oh, okay, that kind of bar in the shower. All right. So it was a goal. And as we led into that, we talked more seriously about remodeling and is this the year you sell the home, or is there something else you wanted to do around the home that you know what, you just might have been putting it off over time, and it is now the time to take on that big project, talking about goals, and then, like you said, the planned expense. How do you fund it? Those two really work together.
Yeah. Mm-hmm. Yeah. I say don't focus on the little things. The big things will take care of itself. So don't say I want to have $1 million in 5 years. Say every day I'm going to focus on this, whether it is the spending, where my money goes. If you focus on where your money goes, that you'll benefit from the game. Just like if
you feel it.
Yeah, because it's just like if you focus on weight loss. My goal is not to lose 20 pounds. My goal is to make sure I go to the grocery store, get a lot of vegetables, a lot of protein, no junk food, no carbs. And the end result will be I lose 20 pounds.
No nerds.
Right.
No nerd clusters.
So again, focus on what's going to provide the outcome. Don't focus on the outcome. Mm-hmm. Right. So focus on the here and now, and the big thing will take care of itself.
Mm-hmm. I guess I'm not allowed to have cupcakes anymore.
No, you make my diet living hell.
I've been a lot better about that. I walk right by it.
Yep. And some of us can't. Yep. So,
all right. Well, this has been great. It's been helpful. Thank you very much. That's it for today. Thanks for tuning in. We hope you'll share with your friends.
Boxland Media. Think big.